You're welcome. You're welcome. Welcome to another episode of Real Estate Investment Updates and Tips brought to you by Oluwaseun Adesina. And today we'll be talking about mortgage in Nigeria. We'll be giving an overview of how mortgage works in Nigeria. The average individual desires to own a house of their own where they don't have to worry about house rent or landlord wahala, which also means landlord problem. You all agree with me that owning a house in Nigeria is very expensive considering the state of Nigeria economy and the standard of living of average individual in the country. So now this is where mortgage comes in. What is mortgage? Mortgage is a financial agreement where an individual takes a loan from a financial institution or a bank to purchase a property, typically a house or a building, and also uses that property as a collateral, meaning if the individual is unable to pay up the loan, the bank can collect that property from the individual, which means the property can also be used as a collateral. Mortgage interest in Nigeria ranges from 15% to 25% per annum, and whether you like it or not, mortgage is 100% functional in Nigeria, and it is not as difficult as you think it is to access. There are some of the financial institutions that are responsible for mortgage transactions in Nigeria are number one, the Federal Mortgage Bank. The Federal Mortgage Bank is the primary institution that is responsible for mortgage transactions in Nigeria. And number two on my list is the Cooperative Mortgage Bank. Number three is the National Housing Fund. And of course, number four on the list is the financial banks, such as the UBA, Access Bank. And this brings us to the types of mortgage in Nigeria. Number one is a legal mortgage. This transfers the legal title and the legal interest of the property to the person who collects the loan, which in this case is known as the mortgagee. Number two is the equitable mortgage, which only transfers the beneficial interest. Now, this type of mortgage does not transfer ownership or title to the mortgagee. Requirements for you to get into mortgage transactions in Nigeria: it has to be a transparent transaction. And number one on my list is you have to show that you are financially capable. You have to show your financial capability. Number two, you have to show that you have a steady income. Number three, you have to show your monthly income and expenses. And then number four, you have to show your debt record. The bank needs to know your debt history, to know to make research, or to know if you are owing any other financial institution and your track records of paying debt. Now, the bank also needs to know the worth of the property that you want to buy with mortgage. They need to know the worth and also compare it to the loan you are requesting. The mortgage industry has experienced significant growth in Nigeria, and as potential house owner, that is why it is very important for you to understand how mortgage transactions works in Nigeria. In conclusion, it is very important for you to seek professional advice such as the legal practitioners and real estate agents, because they understand the local markets and they can easily guide you on the type of property to buy and the one you should not buy. because in the long run, every property you buy is expected to be an asset and not a liability.